All right. Hey guys, happy Thursday. Team Mariani here at the Fun Collection, coming to you guys live in Windermere, Florida. And today's topic, I'm here with the team, including my daughter Isabella, who are super excited to be joining Team Mariani soon as she's in the process of getting her real estate license.
Yay.
So I want to give a shout out to my baby girl here. So today's topic, we want to talk about what's on everybody's mind right now in the real estate market. What's going on? You're hearing a lot about interest rates, it's very volatile, up and down. You're hearing about, recession. So we, figure, let's come together, collaborate as a team here, and just have a discussion and talk about what's on everybody's mind. Kind of share, our opinion of what's going on, and as we talk to other major leaders in the industry, where we're headed. All right, what do you guys think?
Yeah, absolutely, guys. So we know that you see a lot of information on different Google search engines, on different TV channels. We know that's where you're getting your information. Our information is physically, literally coming from hitting our feet on the pavement each and every single hour of our day. We're always out there working with buyers, with sellers, with listing agents, other buyers agents. So we see real life of what's really truly going on. And this is what we would like to bring to you to kind of put you a little bit at ease. So what's happening right now, it's not bad at all. So rates go up and down all the time.
So I guess let's address the first thing, right? Interest rates.
Interest rates.
Should I buy now? Right?
I think that's everyone's question. Should I buy? Should I wait?
Right.
Yes.
Especially with the Feds going up yesterday. Actually, they went up yesterday to another 0.75, and I understand a lot of people are probably at the borderline, cannot afford anymore as much and whatnot. But I always say, hey, look. Interest rates is one of those things that go up and down. So, granted, it's at a high point, but it's not at the highest point yet.
Right.
And it's still you still have a chance to get into your home. It might be a little tight right now, but 6-7 months, maybe a year from now, that interest rate is going to come down eventually. And once the market stabilizes, things become normal again. Because right now everything's abnormal. Gas prices are up, this price is up, that's up. So with that being said, get into your home at a 5.75.
I think 5.75.
5.75.
6.75 on conventional.
Yeah, and that also depends on credit score and
course.
all kinds of different varies.
Definitely.
So I always find it, talk to multiple lenders, see who's giving you the best offer and whatnot. I mean, you don't have to go with one lender and whatnot, but go with a few lenders, compare the pricing, see what they're looking at, and see what you're looking at, what's right for your budget at the end of the day, and then go accordingly. And then down the road, refinance. A lot of people refinance when it dropped to 2.875. Remember? Everybody either sold or refinanced.
Right.
So that cycle's gonna come back again where
But the
rates
point
drop.
is, it wasn't the rate they originally started with.
Right.
Exactly.
I mean, Yulia actually reminded me yesterday when we bought our first house, and if you would share what year and what rate it was.
So when me and Phil, we started investing in real estate in our early 20s. So when we purchased our first home in Hunters Creek area, by the way, in Orlando, we closed on November 30th, 2000 at 8.05% interest rate. When I saw that yesterday on the paper, I'm like, oh my gosh, I cannot believe we actually paid that much. But back then, it was absolutely normal.
Right.
8.05, and then we purchased our second home in Winter Garden. We closed the end of December.
2003.
Yep, December of 2003. That home we actually closed at 5.43, I think. 5.43 was something like around 5.4 something. So in 3 years, we literally dropped in half.
Right, and then when we got started in real estate, 2015,
Yeah.
the rates, I remember there were high 4s and lower mid 5s depending on the credit score.
Right.
Yeah.
So we're kind of going back to where we were, but check this out. 2015 rates were kind of at, for the most part, where they're at right now.
Right.
But a couple years later, just look like just like over the past 2-3 years, everybody that had bought 15, 16, 17
Right.
refinancing. So
Right.
guys, at the end of the day, historically, yes, interest rates go up and they also come down. So don't get stuck on the interest rate, right?
Right.
Because you can always refinance,
Right.
okay? But what you can do is you can't go back tomorrow and buy a home at today's home values.
Right.
The market is not going to crash, all right? Where, you know, the problem we have is always been for a while now is the inventory supply. That's it. We're not in a bubble. We're not giving out bad loans. It's actually more
Right.
stricter and stringent to get a loan now than it was years ago, right? So we're not. You have to qualify for the loan.
Right.
Whatever the price is there's a debt to income ratio you have to meet, you have to qualify. So we're not just giving out loans to somebody who says, yes, I have an 800 credit score, and I make 150,000 a year, but I only make $30,000 a year. Really, that's
Right.
not happening,
Right.
Yeah.
right?
Yeah, but back then, I mean, if you had a pulse and you could
Right.
breathe oxygen, they gave you a loan for
Exactly.
$500,000.
Right.
Exactly.
I mean, even then, they didn't even look at credit score as much. If they did, they practically ignored it. I mean, anything to give people money back in the day, they were just giving it to them, especially like between 2005 and 2006, and that's what caused the market crash in 2009.
I just think people to make sure they know the difference of what happened then and what's going on now in the
Right.
market.
Right.
Strictly right now in the market is just a huge supply and
Right.
demand.
Right.
The amount of people that are moving to Florida has doubled.
Right.
Right, we got people from all states coming here, California, New York, all major cities, right? And on top of the growth that we're having, and the amount of millennials that are in the market, the amount of the households have doubled in size, or if
Right.
not more. And again, we do not have that inventory to,
Right.
the supply to meet the demand.
Right.
And the data is even showing. We were looking at some data yesterday, listening to a conversation, and where they're talking about the amount of new build starts are like at 1 million, where it was like a few years ago it was like 2 million.
Yeah.
So we're literally half.
Right.
So I believe that from everything we're seeing, we're going to be like this probably for like about another 5 years. And home values, I believe, are still going to appreciate about 5%.
Right.
A year. So what people need to realize is what's going on right now. The Feds are doing this on purpose, driving these interest rates to slow down. Not bring down the home values. You're not going to lose value. Home value's not going to go down. It's going to be just to slow down how fast the values have been going up, guys.
Right.
Remember, trying to get back to like pre-COVID days.
Right.
Where we
Trying to
had a
stabilize
normal 3-5%. Type of appreciation, not 20-30% like we've been experiencing. And to give you a quick example of that is like we just had a double closing this week, right? So I had a couple that you probably saw on social media. They purchased a home in November of last year for like $383,000,
Right.
and I just put it on the market literally about a month ago for $450,000. And we're talking in an amount of 6-7 months here. And we accepted an all-cash offer at $454,000, $4,000 above list, in an amount of 6-7 months. So the profit was crazy. So I was able to help take that client to get into another house, and they still put money in the bank as
Right.
well. They purchased the house at a $435,000 price range.
That was a win-win for them.
So it's just kind of that's an example. So guys, there's a lot of
and
still
you had
cash
an
out there.
investor on that house.
Right. So guys,
$450.
investors are still investing
Yeah.
here in Florida. So if they're investing, they're paying top dollar, or in this circumstance, they paid over list price. What does that mean? That
Yeah.
means that there's a reason why they're investing their money here,
Exactly.
because they know the real estate is not going to go down; it's going to appreciate. And then on top of it is, I think the lesser of the two evils. Do you really want to go and rent? Right now, rent prices are inflated more than ever, and they will continue also, I believe, the rents to go up as well.
Yeah, and I think that's the concern with the interest rate going up. Everyone's concerned about their monthly payment. They're
Right.
getting less house for the interest rates. But they got to look at it like that. The rent's not going down either.
Right,
Right.
exactly.
So it's like you said, it's the lesser of two evils.
It's like either you can pay somebody else's mortgage or pay somebody else's investment off, or you can invest into your own. So I think a lot of people, I want to encourage, especially a lot of first-time home buyers, is don't go into a purchase thinking, hey, I'm going to be here for 30 years.
Absolutely
20,
not.
30 years. Because that was when I was growing up. I
Yeah.
stayed in homes growing up for many, many years. But today, look at it, listen, just get into the market, get into home ownership, take advantage, because the home values are not going to go down. And again, just just go into the mindset, I'm gonna be there maybe 2-3 years.
Correct. It's like 3 to 5 is the average now.
It used to be 5 to 7, but now
Right.
lately it's been like 1 to 3 years.
Yep.
Yeah.
As people have been
It's
changing
the
homes.
monopoly game. You go in, and you flip.
But you gotta understand, Gen Z and millennials, right? They're not staying put in one place. Now
Right,
more
exactly.
people are working
Yeah.
from home, so they're
I
like,
know,
you know
she
what?
only wants to go.
Exactly. Yeah. So Gen Z. I think 70% of them are purchasing homes now.
Right, exactly.
Yeah.
And I think that actually contributes with all the home sales that are happening as well. And as the market keeps climbing and climbing, Gen Zs, millennials, baby boomers
Baby
are all
boomers,
they're all
yeah.
gonna start continue buying a
Mhm.
home and selling a home. But not like we're saying, hey, there's not going to be a cool off. There's definitely going to be a little
Right.
bit of a cool off. It's not going to be 18-20% year
Right.
over year.
We need to
growth,
bring it back
like
to
you said.
Correct.
the prices back to somewhat normal, and
Right.
that's
We
exactly
just
what's
need to
going on.
stabilize a little bit
Yeah.
because
Right.
it's a craziness going on.
Right.
I mean,
So-
at least it was February, March was completely out of
Yeah.
control.
You're right.
So the market is very dynamic. And people say, Phil, how's the
Yeah.
market right now? I say it's very dynamic.
Right.
There's a lot of moving parts, but we're still getting it done. We're
Yeah.
still getting it done for our clients.
Absolutely.
We're still helping our clients, sell. Obviously, if you're pricing your home, because I deal with a lot of sellers mostly, right? And obviously, if you price your home, way overpriced, yes, it's going to sit on the market. So we are seeing some
Right.
homes on the market a little bit longer. Why? Because people are way overpricing them.
Right.
Okay.
It's not compelling.
Yeah,
It's
so-
not
Well,
compelling,
just
it's not
alone, I was
selling.
doing my weekly report, and we had an increase of 30% of homes that went on the market in 1 week.
Right.
Yeah.
So that tells you there's going to start becoming more and more inventory.
Mhm.
Yeah.
Remember,
There's nothing wrong with that. It's just going to help
exactly.
stabilize things. But
Yeah.
I mean, we're still closing in 14
And we
days.
need
Yeah.
to do that. Like what's happening right now with interest rates, we needed that
Right.
for
Yeah.
sure.
Yeah, a healthy
Yeah.
market is 6 months worth of inventory. People
Right.
don't realize that's a
Exactly.
healthy
That's a
market.
healthy market, yeah.
And then in February we were like 14 days.
Yeah.
Yeah.
It was crazy. I'm like,
Yeah.
where am I gonna get these homes
Yeah.
from a buyers?
Well, we just did 14 days in May.
Yeah.
Still,
Again?
yeah,
Oh
14
my
days.
gosh, yeah.
Yeah. So it's just,
Wow.
the demand is not keeping up with the supply. Here
Yeah.
in Central Florida, we have so many, people moving here and needing homes. And that's the problem, guys. At the end of the day, that's the problem.
I mean,
But
it's not a problem that
It's
people
not a
move
problem.
in
That's a good
here. I
problem.
mean,
That's
it's
a
a
good
good problem
problem.
to
That's a
have.
good problem.
But-
We're just gonna be in this home shortage for the next 4 to 5
They're
years.
just causing traffic
and
jams.
because of that, home values are not going to go down.
Yeah.
There would have to be such an influx
Yeah.
of properties on the market to weigh over the demand, right? In order
Yeah,
for home values to drop, so they're not going to go down. I believe they're going to be at least 3 to 5% a year over the next 5 years,
Right.
instead of having to 20%,
Yeah,
crazy.
I
That's
think-
what we need, just bring it down so we can still keep it affordable for buyers. Obviously, yes, if interest rates are climbing, you will lose a little buying power.
Right.
You
But
could
then
look
just
at.
adjust your home
Yeah.
criteria.
Yeah, I mean,
to
there's
that
ways of
purchase
buying
price.
rate
Yeah.
down, and
Right.
there's different incentives out there now.
Yeah.
We even builders are offering buy downs and things like that
Oh,
to
yes.
help.
Yeah.
But at the end of the day, I believe get into the market. Don't think of it, hey, I need to be here 20, 30 years, I need to find the perfect home.
Right.
There's no perfect home out there, unless you
Right.
totally build it from scratch with an architect or something,
Right.
Exactly.
Get in, make some equity,
Just get in there,
Right.
and play the monopoly.
Yeah, just,
That's it.
you're gonna pay the same amount of rent just about anyway where you
Right.
live. You gotta live somewhere anyway. You gotta pay rent for the rest of your life anyway. You might as well pay into your house a mortgage
Right.
and start somewhere. So I think that's, my recommendation for people looking to buy right now is not sit on the sidelines, because I really do believe that in 6 months they're gonna be kicking themselves saying, you know what, now I'm even 10,000 or whatever less, than I can afford before,
Right.
and that's just gonna make your home purchase even more difficult.
Yeah, like you just mentioned, if you're in the market to buy it now, buy it now. I mean,
Yeah.
don't wait 6 months or 8 months or 10 months or whatever the case may be, thinking there's going to be a crash.
Yeah.
There's not going to be a crash. The banks are not going to allow it to be a crash anymore. So if you're looking at buy a house, buy it now instead of 6 months from now, because home prices are still going to increase.
Correct. And
at
interest rates are
3%.
going to continue
Yeah.
down.
Interest rate
Remember-
might go up, like I said, but again, interest rates are such a volatile thing.
Yeah.
It's kind of hard to say what 6 months will look like from
Right.
now.
Even
Maybe
if
the
it's a
market
year from now,
yeah.
even if it's a year or two
Maybe
from
the
now,
market stabilizes
it
6
will
months,
come down,
exactly.
so
Yeah.
you're getting a 30-year mortgage anyway.
Exactly.
Even if it takes a year or two for the rates to come down, they eventually will come down. And just like everybody did over the past couple of years, what did they do? Everybody had like 5 or you know,
6%
percentage,
interest
they
rates,
all
yeah.
refinance to like a 3 or a high 2s depending on
Right.
credit scores and things.
Right.
Mhm.
So everybody will have that same opportunity again, but at least now you're in the house and you
Right.
secured you secured a house at a price, and now the money that you're paying to the mortgage every month is going to be going towards building an asset and an equity. And I
Right.
think that's the most important to focus on right now.
Yeah,
Right.
equity is your savings account,
Mhm.
right there, your savings account,
Yeah.
And you're still going to have an appreciation
yeah.
as well, just not crazy high.
Right.
But again, you know, again, we're seeing pockets still here
Right.
in Central Florida that's
Right.
still, like, you know, you had submitted an offer in a house that had 20-something offers still on
It's
it.
still happening.
So
It's still
there's still
happening.
pockets, regardless of what people thinking, how long say, again, guys, we're in this day in, we're full-time real estate agents, we're in this, we do probably between us and the team 100 transactions a year, and we're in this market, so we're just giving you our professional opinion from this known,
Yeah.
talking to agents, knowing, you know,
What's truly
know,
really
what's
going on
what's
in
going
real
on, yeah.
time.
yeah.
And always have a, like we said, we always have a positive mindset of what's going on. Okay,
Yeah.
if a recession does come in, okay, what do we need to do to adjust ourselves? And
Yeah.
what-
It's
And
just a little bit.
recession,
Yeah.
it doesn't mean that it's home recession.
Exactly.
It can be recessions in other areas
Exactly.
of the
exactly.
economy.
And a lot of people have been talking about recession
Right.
coming in, or an induced recession
Right.
happening. So we don't even know what that means, actually. To be honest with you, a lot of people don't know what a recession is. They just hear the word recession
And they
and,
think it's-
freak
oh,
out,
yeah.
right?
Right.
So I wouldn't recommend anybody freaking
Well,
out.
Feds
yeah?
actually said they're not trying to induce recession at
Right.
all. They're just trying to stabilize the market,
Right.
Exactly.
which is goes back to I completely agree because as a buyer's agent, it truly was
Yeah.
completely out of control.
It
It
became
was
very
to the
challenging.
point where my buyers couldn't even secure the homes for themselves.
Right.
Mhm.
It was
Exactly.
ridiculous. We had one client who was living in RV because he couldn't even secure a house for himself. Like that's insane.
Yeah.
Right. And that's the trouble we're having right now. We want to get the market stabilized. So our
Yeah.
buyers that were on the borderline
Mhm.
and no longer in the borderline, they're at the bottom
Yeah,
of the borderline.
that-
They
that
want
at
they
least
can
have
at
a
least have a
winning
chance.
chance.
Correct.
Exactly.
Exactly. They have more of a fighting chance.
Exactly. And but not saying that it's going to completely flip into a buyer's market. I don't
No.
see that
No.
happening for
Definitely
another
not
year.
happening,
No.
guys.
Yeah.
Yeah, we just, I remember Tori Sulo,
Yeah.
builders can't keep up. Most building a house is taking over a year and a half to build.
19 months to be exact right
19
now.
months.
19 months to be
19
exact.
months, guys, from time you sign contract and the house is still not completed yet.
Yeah, we just got trusses
So-
put in a couple weeks ago, and then, but
But you already
yeah,
have
exactly,
value in that
exactly.
house.
I have
But
value
give
in
an
the house.
idea, like what type of
Exactly.
equity you have gained
Yes.
because you purchased when at the time.
Well,
I,
you
yeah,
signed the
I signed a
contract,
contract
yes.
at that time, but
Yeah.
like lumber prices, windows, things
Right.
like that are still somewhat of a delay. Some are not. Like lumber, I think, is back to normal
It's back,
again.
yeah.
Windows are starting to come back to normal now. Something else would be like
Mhm.
AC units
Right.
or HVAC, whatever the case might be.
HVAC is a new thing.
HVAC
Yeah.
is a new thing.
Yeah.
So
Something
there,
changes
Labor
every
usually
month.
too.
labor is another one.
Yeah.
But I mean, there's always going to be some kind of thing that's like a
Last
slight
August
setback.
it was
Slight
paint.
setback.
Yeah, yeah.
I don't know if you remember. Last
Yeah.
August there was.
There was appliances at one point.
Appliances at one point, yeah.
So,
I can't get a refrigerator in my
Yeah.
house. Like, how are you cooling your food?
Yeah.
I got a cooler in the- I got a cooler in the back.
I got a cooler in the
Got a
back.
cooler in the back there, you know what I'm saying?
But that's what people are waiting 6 to
Yeah.
8 months for on appliances, and you know, waiting on certain things. It's not like we're not going to get those items. We're eventually going to get those
Mhm.
items back in the market. Factories are going to start opening up again, which they are. So like Canada is practically open. That's where we get most of our lumber from.
Mhm.
Because of this inflation, lumber prices are starting to come down again.
Yes.
Right.
And prices will eventually stabilize. Markets will eventually stabilize. That's the whole name of the game there, right? We want to have some kind of stabilization. I mean, who'd have thought COVID would put everything into a tailspin like it is now, right?
Exactly. So we
Yeah.
just have to pivot with the
exactly.
market.
Always pivoting.
And
always
at the end of the day,
pivoting.
you know, I believe that now is the best, you know, time to buy still, where you're gonna get, you know, now it's your cheapest price you're gonna get.
Right.
Moving forward in the future, it's not gonna get any cheaper.
Right.
It's just gonna go up still a little
Right.
bit. You
And
know?
also, I think what a lot of people don't know or maybe forgetting, we started multiple offers back in 2018.
Yeah.
You know, I get Facebook reminders like multiple offers won 2018. I'm like, wow, really?
And
it
that's
just got, you know, escalated. So now instead of maybe
Yeah, when
having,
Wall Street moved
you know,
in.
Yeah.
Oh my
so maybe we
God,
can say
yeah.
instead of, you know, obviously maybe we're at a
Yes.
point now where we're getting maybe half the amount of multiple offers we did before.
Right.
I mean, look
You
at
know,
this
but
house, 29 offers.
29 all, but still, again, go by pockets, right?
Yeah.
So it's all go again, buyer demand, area demand as well. That
Correct.
plays a big, big portion.
And there's an urgency with buyers now too, where they're saying, okay, these rates are climbing. Let's get into a house now before
Right.
it gets even worse,
Yeah.
or before it gets even higher.
Correct.
I'm not saying it's
Or
yeah.
just paying inflated
Yeah.
rental prices.
Yeah, exactly. I mean, there's no cap on rent down here, so
Right.
you know what I mean.
Yeah.
So there's
Some people talk about it going up $500 to $1,000.
exactly.
Some people are
I
raising.
mean, we did.
Yeah, we had a
Yeah.
rental property that we had to raise
We
like
went
$400.
Yeah.
Because the cost of everything else has gone up, so
Yeah.
rents are going to go up,
Right.
and that's just a trickle down effect for
Right.
everything. Especially starts with gas, right? It all starts with gasoline.
And home
Gasoline
insurance.
home insurance, exactly.
Yeah.
Yeah, home insurance too. Mhm.
So at the end of the day, guys, we get it done though. We're very aggressive working with our sellers and our buyers, and we get it done. Like I said, I was able to do, get an offer accepted for a client that we did a double closing on, where we were able to get a house under contract, and we had a home sale contingency. So again, most people, don't want to accept those in the bar, but I was able to get it done and accepted. So we find a way to get it done at the end of the day. But the most important thing is definitely, we recommend get into the market. If you're in a position to buy, get into the market. Don't
Right.
get caught up on everything else, because
Great.
you don't want to go and start, continue just to pay, rent of money, spending money you're never going to see again, and paying somebody else's investment when it could be something you're working on.
Right.
And just have the mindset, hey, maybe this will be a 3 to 5 year house. And then you start as a first time home buyer, and then you do what everybody did, like we did. Everybody did. You become a second home buyer or
Right.
an upgrade buyer,
Right.
so to speak. So.
And there's home, guys, there's home for everyone. We just,
Right.
in any price range, we just need to adjust your specific criteria to that purchasing power that you have,
Right.
and look for that particular home and the area that will
Accommodate.
accommodate. Thank you.
Yeah.
Totally.
So, I don't know. Hopefully this helps. Hopefully this helps guys to share some light on what's going on, what we're seeing
Right.
in the market, people that we're talking to in the industry, leaders and economists, different people that are in the real estate, and so hopefully this kind of share some light, and definitely feel free to reach out to us, social
For
media.
sure,
Facebook, Instagram, we're on everything, guys, every platform. Reach
Yeah.
out to us if you got any questions. We would love to help you, whether looking to buy or sell a house. We'll help you get the job done. We have an amazing lender that we work with that has different programs. Also, if you're a frontline worker right now, there's a great program out there called the Hometown Hero,
Yep.
where it's providing up to $25,000 in down payment assistance if you're like a firefighter, police, law enforcement, medical, what are some other things? Teachers,
Yeah.
right?
That's
Teachers
a
need
huge-
help.
yeah.
That's huge.
Yeah.
Guys, offering up to $25,000 in down payment assistance. It's a huge program. If you fall into line with that, also reach out to us. You want to take advantage of why this free money is here, okay? Because there's a certain amount of money, and once it's used up, it's done. So reach out to us for more information on that.
Yep.
Also, you can visit our website, www.teammariani.com. And guys, we're here to help, man. We just want to, we love what we do.
Yeah, and if you guys just want to give us a call, just bounce off some ideas,
Yeah.
what you
Right.
think, or because the market shifts every single hour of the day. It truly does. It shifts hourly, daily, weekly. It shifts very fast. So we just pivot. If you have any questions, just
Right.
give us a call.
All right.
Our information is going to be in the description, so if you want to give us a call, shoot us an email. Just feel free to ask any questions you may have, and we'll be happy to answer for you. Alrighty.
You guys have a
See
great
ya.
day.
All
Yeah.
right.
I guess see you guys soon.